my market report. My name is Mike, and if you're new to my videos or my channel, well, we create these videos on a daily basis that discuss what's impacting mortgage rates on any given day. And we sometimes it could be something from the economic calendar, it could be something from headline news, geopolitical. Sometimes sentiment in the markets just simply change. Well, we're here to kind of delve into it and kind of give you that information as to what transpires and why rates are acting the way they are. So, hopefully, this will give you a little bit of information if you're in the market looking for a refinance or purchase, or if you're just something in the real estate industry. Hopefully, this will give you some good information to go with if you're trying to follow rates. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So if you are looking to purchase or refinance, please reach out. We are here to help out. We can certainly run numbers for you, give rate quotes and such. But not only that, we are here as a resource for you folks as well. If you've got questions about whether it's something about the process or programs available out there, we can answer those questions for you as well. So again, hopefully we'll hear from you guys soon. Just reach out to us, the social media site that you found us on, and we will definitely be in touch. In the meantime, why don't we just jump right into the video report, our report today. Today is actually an important day, and we'll touch on that in a minute. But first, we'll start off with our economic calendar. Something we kind of look at, but we don't put any weight into it, is the MBA releases their mortgage loan activity report every Wednesday. And what this tells us is how many loans are being done on a weekly basis. So, as you can see here, the purchase side, it did dip a little bit from last week's numbers. And then, of course, the refinance with the rates going up also dipped a little bit as well. Now, here's more where we're looking into here. We got new home sales announced here, and we had the previous month for the month of today's reports are on for December. So November's data was actually revised slightly lower, 1,744,000 seasonally adjusted annualized units to 725. Forecast was supposed to jump up to 760,000, and it jumped up to 811,000. So we had a good overall number for new home sales. That jumped up 11.9% there. Later today, we'll get the two-year auction. And then, of course, what we talked about was today's a real important day. Well, it's the second day of the FOMC meeting, and today is the announcement day. This is a day that everybody's been waiting for. There's been investors been really jittery. We've been experiencing disappointing Q4 corporate earnings reports. We got the geopolitical with Russia lining up against Ukraine. We got that geopolitical issue going on right there. We also got high inflation, and of course the rise in yields. The rise in yields has been kind of hurting the interest rate sensitive Nasdaq growth stocks there. So as those have been rising, that's been cutting into a lot of growth in the dominated stocks there. And of course, Nasdaq's been taking a pretty big hit. They hit contraction period last week and still trying to work its way through it. In the meantime, the other item here is, of course, the Fed. They've been watching, and it's just their stance. They're trying to worry if the Fed is going to be more aggressive than they think, or about the same, or a little bit more mild, especially after the big sell-off in stocks. They're kind of wondering if that will have any influence on the Fed as well. So, in any case, there is talk that there could be the next meeting will be in March, and that could be the first rate hike. We could see our first rate hike as soon as March, and then 3 to 6 months later, we could start see the tapering, not tapering because that's where the tapering is supposed to finish, but the balance sheet reduction. So we're trying to figure out as to if it's more in terms of the passive, or if they're going to be aggressive and actually start adding more supply to it. So the markets are trying to brace for this in the meantime. Stocks are up so far today, and as you can see here, even mortgage-backed securities are up a little bit. They did. We had that about 3 weeks in a row where we kind of just went downwards. So we kind of got a lot of that priced in. However, a big spark could potentially boost us one direction or another. So it could help us out a little bit, or it could hurt us a little bit. So we'll have to kind of see. And of course, stocks could help too. So if stocks don't like it, some of that money goes to flight safety, and that helps us out as well. So right now we're up 3 basis points, which translates mortgage-backed securities are in a position where our mortgage rates are about the same as yesterday. So far they're unchanged. But 11:15 is when they give the announcement Pacific Standard Time, and we'll see if uh, how the markets react to the Fed's announcement. Here's today's so far. So yeah, as you can see, we worked upwards. We came down a little bit, and then came down a bit further. Even tested a lot further down. Came back up. Now we're kind of down again. So a lot of volatility, as you can see here, up and down, up and down. Here. So again, mortgage rates are unchanged so far, and we'll see later in the day how much more a reaction we get from the Fed. 10-year Treasury is just under 179. It's in between the two technical ceiling and floor. As you saw, we broke above it the other day, and it even tested it again yesterday. But right now, it's kind of in the middle right now, just under 1.79% on the 10-year Treasury. Lastly, we'll go ahead and look at the conforming average rates in the U.S. Average conforming rates, and they'll have points built into them. So right now, the 30 years at 3.66%, and the 15 years looking at 2.92% here. So those are the average rates we're kind of seeing for conforming limits. And of course, these are points. And of course, if you follow my videos, we've discussed in the past, not one size fits all. There's a lot of variables that go into rate quotes. So again, if you guys want one, go ahead and reach out. We'll give you a rate quote. We can certainly work with you guys on that as well. If you guys like these videos, please help us out. Smash that like button and share. We greatly appreciate any assistance you guys can lend towards us. We do appreciate you guys. And if you guys got questions, please reach out as well. We're here to help answer any questions you guys might have. We do thank you very much for your time, and we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.